Welcome to the Swing Trading with Cycles channel. We're going to do our update on natural gas today. It is March 20th, 2023. If you're new to the channel, welcome. For anyone watching this video, always take a look at the pinned comment. That's going to show you all the playlists. This channel is organized by playlist. We review pretty much every asset class you can think of, and also previous videos from natural gas as well, if you're here for the natural gas content. What I will say is price action is universal. It works on anything that trades because it allows us to identify the trends, and then most importantly, find those reversal points. And so we're on the monthly chart of the natural gas futures here, Henry Hub futures, and you can see we've been talking about this. This is the pattern to be aware of. We made a higher high above the last candle, the previous candle, I should say. And now we are on pace to make a lower low below the previous candle. That's called a bearish outside candle. It's an outside candle in general. Bearish if it closes red, bullish if it closes green, obviously. This is our last bearish outside candle. You can see, I'll zoom in, this candle here. And this one made a very slight higher high. So so this was 9.664. That previous month's high was 9.447. So you're talking about like a couple hundred ticks kind of thing. It made that slight high and then it went red. Once it did that, you knew there was a high probability it was going to make a lower low, and it did that, and it closed appreciably lower than that low. And so that is a big warning sign when you see that. And I saw a comment on Twitter that, you can't like look at the monthly candle when it's early in the month. It's like, what? That's what multiple time frame analysis is all about. And we'll talk about how the daily chart is telling you that this is more likely than not to fill out. Like, that's the whole point, to connect the dots. But you absolutely should always be looking at the monthly candle. That's the whole point. You should be looking at all the time frames at the same time, understanding what's happening across them. This was a big warning sign. This is a big warning sign because there's still more downside. That said, BOIL has actually already made a lower low. It tends to lead to the downside, obviously. But if nothing else, this channel is more about avoiding big losses, because if you take care of the downside, the upside will take care of itself, right? That first rule of investing from Warren Buffett, don't lose money, that kind of thing. So this is just a big warning sign. This is searching out a lower low. And if it's going to make a lower low, that it's going to be because the lower time frames are in a downtrend. And now we ask ourselves, are we in a downtrend on the lower time frames? Let's zoom down to the hourly chart. Is this a downtrend? Yes, it is. We are making lower lows and lower highs, right? And you can see that downtrend started with this gap down on the hourly, right? From this candle here. And since then, we've kind of meandered sort of sideways to lower. And now we're taking a bit of a fresh leg here. And if we look at the daily chart, we think about the context of cycles. Take a look at that pinned tweet. There's a whole video about that, the way to think about that. It's not anything mystical. It's not like, oh, the price action was ordained to do something. No, none of that stuff. It's about price action, which is to say, how long did the rally last? How long did the decline last, right? So this cycle was incredibly bearish because we had a 5-day rally and a 47-day decline. So it was a total of 52 days. This cycle, and you know that you're getting a daily cycle high once you have a swing high. Now, that's important. I'm going to say this 2 times. Every daily cycle high is a swing high, but every swing high isn't a daily cycle high. So you need to watch for the other clues that tell you that this swing high is a daily cycle high the same way that one was. And so now the odds continue to favor the idea that this is also a daily cycle high. So this came very early on day 5, and then we had 47 days of decline. We had a little consolidation for sure before the gut-wrenching move lower. This is another little 5-day one. You see this little tiny rally, right? This is an 11-day one. And you can argue this is all actually just one big cycle. It's more like 50 days. Either way, the point is we're on day 18, and so think about that. If the rally so far lasted 7 days and we're on day 18, that means we've declined for 11 days. So we rallied for 7 days and we declined for 11 days. That's bearish. This is obviously, that means that the cycle is left translated, right? We're going to rally for 7 days and we're probably going to decline for, who knows? We'll see, maybe 20 days, 23 days, cycles tend to be in the 30-day range. Obviously, sometimes they're much longer, like this 50-ish day one. It's nothing. There's nothing magical about how long they need to be. But if you think about this if you think about the big picture, you have this big trend leg down, and you needed to bounce. If like in a normal downtrend, you're gonna have lower highs, so you couldn't just keep falling like that. And so you've done this, and now you're doing this. Maybe you do a little wiggle up before a move like that. Now it's going to be decision time once we get down here, right, where we retest this low. Are we going to have a little double bottom kind of action? Like basically, we could be in a situation where this whole daily cycle is a whole waist double bottoms, and then you get a rocket ship out. And of course, you could also just fall through it. Again, that the point is not to try to predict what's going to happen next. You can't do that consistently. It's to understand what the likelihood is and then understand what you'd be seeing in real time. So once we test that low, it'll be clear in real time, like on the hourly chart, on lower time frames. Are we holding that level, or are we about to sink through it? If not, completely kind of collapse onto the other side. Now, if we go to the weekly chart, the other pattern that you're looking for, you're always looking for lower lows. Lower lows are bad, right? Like generally, right? Because lower lows are what happened in a downtrend. This is just the same view that we talked about, but on the weekly chart. And think about that in the context of this move down. So you had this big move down, and then what happened? You had this little rally, and then you had this move down, and now you've had this little rally. And so you then have this move down, another rally, etc. That's the prevailing idea, right? And there's a seasonality component to this. As we've talked about several times on this channel, this is a seasonality chart for UNG, and you can see the winningest month by far and away, percentage terms in terms of percentage terms that it's positive is April, right, at 73%, and February has a pretty low percentage. March isn't so great at 44%. And so it wouldn't be surprising that we see a nice little bullish move in April, even if it gets stamped out the rest of the month. I mean, look at the percentage, the negative percent, or the likelihood in July. So you could see a world where we get a little bit of a rally in April and then just kind of dip into another low. And it just becomes a really meandering period for natural gas this year. That's not a prediction. Again, these are all just scenarios. So we'll look at them, and we already talked about the monthly chart, obviously. And as we said in the last video, if you look at and we're going to look at UNG and BOIL next. If you look at the quarterly chart, I mean, this is just bad news bears, right? Like just a big red quarterly candle, which means the absolute best case scenario is you remain kind of inside the range of this big red candle, which is generally kind of what happens. I mean, you can think about like this red candle. Look how long price stayed inside its range, more or less for 3 quarters. So this big quarterly candle down, you have basically 3 quarters of staying inside that range. And then it takes another 3 quarters to break out of the range in the next big quarter. And so all that to say, we have a lot of supply. Like it's going to probably be a tough move up, more likely than not. And so let's move to UNG to look at those levels. And I mentioned that BOIL actually completed the bearish outside candle pattern. UNG hasn't yet. So again, you think about, and this happened before, where BOIL made an all-time low before UNG did, and then it eventually succumbed. And so and we'll look at cold because that's obviously the inverse. So again, that 714 level, we closed at 743, so about 30 cents more downside likely here. That's here, and again, just you can see the like it made a higher high, it's a very simple pattern, and it's very telling. And just to connect the dots, that's a false breakout on a lower time frame. Like think about that. In order for this monthly chart to do that, what you had is a false breakout on a lower time frame, which is essentially this big move. I mean, look at that. Now, this kind of got abandoned up here, a big swing high, boop. And of course, because this doesn't trade overnight, you have this huge gap, from this to, where we opened down here. And then it's just been drooping lower ever since. So that's UNG, pretty clear. Again, on that weekly chart, we're also, and just a kind of scenario plan here. If we did have a 30-day cycle, something in that neighborhood, let's say, that would put our low at, wow, that's not surprising, right? That puts our low at somewhere around early April. So, in this case, let's say specifically April 4th. Again, not predictions, folks. These are scenarios. Isn't it interesting how that lines up with seasonality, though? And so patience is warranted here. That's UNG. Let's look at BOIL again. As we talked about, it has already made that lower low and just slightly, I will say. And remember, it's always important to note any lower low is vulnerable to becoming a false breakdown if it doesn't get followed through. Just like a higher high, which is what this was, is vulnerable to becoming a false breakout if it doesn't get followed through. Like that's what happened here. This thing got like, we went boom, 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 and went like this, and then like, hey, where are my boys to come follow me? Nope. Like, and you have a gap down and then just droop. That's the simple way to think about it. So what I'm saying there is there's a chance here, right? Like this is the chance, right? You undercut this low by a little bit and then whoop, that's the chance. Let's see what happens. You obviously have this gap here. What is that? From 635 to 691. And you have obviously gaps much higher up. But think about it. If BOIL always falls at a faster rate than natural gas, it means it's going to be harder to get back to these levels. That's the whole point about the decay, etc. So the further we go in time, the more likely it is that like this gap doesn't get filled. Let's say we get down to $2. I'm not saying we are, but like at that point, you need to do an 8x to get back to like these levels. Well, we'll keep watching that. And you can see again, just in free fall, like this is the pattern complete, right? But I mean, look at this, just 4 months of nothing but red, and obviously incredibly unlikely that this monthly candle will close green. So again, it's like you're probably going to have, it's like just 4 months of red. Would not be surprising to have a green April again per the seasonality, even if it becomes something like this. Like think about that. This was a little relief, like, oh, and of course it gave back a lot of the rally, but like this looked like a little bit of a relief, and then it was just no rejection. So that's BOIL, and let's look at cold. Let's look at what that thing is doing. This thing also decays, just to be clear, and so cold has not made its bullish outside candle yet in the same way that BOIL has made its bearish outside candle. So that's important, and that's a simple high above 82.81. Wow, and we're down here at 67, so that's actually a pretty good bit of upside still left. So it definitely, especially if one is already long, it gives some an easy, okay, that's another 20% in that neighborhood, and it'll probably overshoot is what you would expect. And so that's the monthly. If we look at the daily, right, so the idea is that you had a daily cycle low here, and this is where it's important. This is kind of the more advanced class, let's say. Since this is in the inverse of natural gas, when natural gas makes a daily cycle high, this thing is going to make a daily cycle low. So the other way of thinking about, so like this is in the new daily cycle. So this is day 1, 2. So the same way that natural gas has been declining for 11 days, this is on day 11 of its daily cycle. So I hope that makes sense. It's a way to kind of surround the trade, if you will, because these should confirm each other. And you can see this is a relatively shallow, like, so in percentage terms, what was the decline? Because obviously BOIL doubled up. Okay, so we dropped 50%. So in terms of the structure of the chart, this doesn't look that bad, but it was obviously a huge move lower, 50%. So you made this move higher, you had this little consolidation, this slight higher high, a breakdown below those lows, and now we're trying to make this move up. And so do we get a higher high here? I suspect we probably do, as natural gas seeks out that low. So something like this, right? Again, considering, like, the way to think about it is if natural gas is topped out on day 7 and it's declining, this thing is only on day 11. So it can easily run for another, basically until natural gas, prints its daily cycle low. So let's say this thing runs till that April timeline, right? So that boom. So that would be a rally of about 22 days. And then the presumption is that it would start its decline as natural gas starts its rally. So that's easily another couple weeks of upside again as natural gas continues to decline. And that would make, I mean, think about how long this rally lasted. Like this massive rally lasted a really long time because obviously that decline for natural gas lasted a really long time. So that's 36 days. And so this is a good way to kind of triangulate. And this is telling you you probably have a bit of downside to come for natural gas and therefore upside for cold. So that's the update on natural gas. That's the lay of the land. We're going to leave it at that. I will say LNG, which we've talked about, is still on pace for more downside into a daily cycle low. Just really quickly, it's on day 19 again. This thing topped out on day 8 after topping out on day 7 before, and of course, this is a much higher high than this one. So I mean, after a gap up, positive earnings, but we're now at the point where we're testing this previous low. Again, could serve as a false breakdown, but more likely is that we're going to come test this low down here in that 135 area. That would be a pretty good target for this daily cycle low. And again, it's only on day 19. Previous cycle was 32 days. The one before that, 35, 34. So this thing has a pretty regular 30-ish day cycle. So let's see, if we call it a 30-day cycle, just simple. Right. So that's interesting. It would actually put it right in sync with natural gas, which it isn't always just right in sync. So that's an interesting one. So we'll leave it there. Thanks for watching.